Good day. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Monday, the 16th of December, 2019, just after 4:30 p.m. Central Daylight Time. So today was a follow-through day. Market to the upside, made new all-time highs, new all-time high close. Even with all this going on, I will not be surprised that we get a Tuesday reversal, simply because this is the last full trading week of 2019. Market seems to have digested a lot. No, I'm not calling for a top. I said a Tuesday reversal, which you often get after a good rally on a Monday. Now, does it happen in every market? It does not. Does it happen all the time? It does not. But we've had a neat rally, so this could be where the market sets back a little bit. Pretty much unchanged day in the energy market. The grain certainly caught on fire as the market is now in thinner markets digesting, if you will, what the U.S.-Chinese trade deal actually means and what's going to get bought. President Trump said that within 2 weeks the deal will be signed, which puts it right before the first of the year. We saw Robert Lighthizer yesterday on TV say that the deal is done and sealed for all purposes. Larry Kudlow. So the only people that haven't said this are the Chinese, and they're mum on it right now. We'll see what the real deal is. I also haven't heard how the meeting today went between Mexico and the U.S. as Mexico is objecting to a new last-minute thing that the Congress has put onto the USMCA deal where they want some advisors to go into the plants. I don't get that. I don't think we should have advisors there that are policing Mexico. Maybe they show up. I mean, why can't you work out something like that? I agree with Mexico more than I do anything. And no, this is not about politics. Not as far as I'm concerned. That's USMCA. We then get to the impeachment vote. I hear that it's going to come about very quickly this week. Everybody in Congress wants to go home. Chairing it probably is going to be Mr. Nadler and Mr. Schiff, and already we're hearing them trying to tell the Senate what to do and who they should call. That isn't going to happen. The Senate's going to go their own way on whatever's going to be there. But we are going to see, in my opinion, an impeachment proceeding, and whether it impacts the market or not in terms of the vote, I can't answer. It hasn't so far. When you take a look, up another 22 points, new all-time high close on the area chart there. Now notice I've moved to the March contract, and the reason is the D stops trading this Friday. You're already in what we call the roll, where traders are moving every day out of December into the March, so I think you start following the March contract at this point. You can see that the swing line still has a pattern of higher lows and higher highs. Again, this is a chart without the swing line. This is it with it. Definitely, to me, that's a sign of still continued bullishness. You'd negate that bullishness and go to neutral. If the market took out 31.18 and a quarter, that's quite a ways from here. That is roughly 78 points, something like that, fairly far. One of the reasons I'm saying I wouldn't be surprised to get a Tuesday pullback is you've now got a couple of closes over the upper Bollinger Band. 95% of the time you will trade within the band, and normally the first times you hit the band, it's an area of resistance. And if you go back on the charts and look at that, you'll see it to the downside or to the upside more times than that. So the percentages call for the market to get a little pullback. Not necessarily a trend change, not what I'm saying. A pullback's a pullback. Support is still coming in on this chart, and it's going to jump from here. It's 31.37 right now, the 18-day average of closes, and it's moving at the tune of 3 to 5 points a day. So 31.40, I'd be comfortable, probably going to be in that general zone. Momentum overbought. The slow stochastic trade is not doing this. It's not embedded. It's not going sideways like that, which often is a sign that the breaks are getting bought. Rather, what the market has done is both numbers today are over 80. Both were on Friday not over 80, so you weren't embedded. You're just gotten to the point where the first challenge over the 70 level is often a sign of being overbought, and that's what I see this market as being right now. NASDAQ is the same, and again, I've moved to the March contract. Trend is up, higher lows, higher highs. On Friday, you did not close over the upper Bollinger Band. You did so today, so pulling back under it, be no surprise to me at all. Again, in tune with that Tuesday reversal theme. The Dow, first challenge of the upper Bollinger Band in a very long time, as you can see. And it's not uncommon that you stall a bit, and this market is more sideways action, certainly in an uptrend. Higher lows, higher highs, new all-time high. I could make an argument for a small pullback here. And in the Russell, the market challenged for the first time last week the upper Bollinger Band. It had hit it here, backed off, went to it, then started backing off, playing back and forth game there. What about the slow stochastic reading? Well, in this market, it's different. Both numbers are over 80. Both were over 80 on Friday. Both were over 80 on Thursday and the day before. So if you were to ask me which market do I think's likely to see the most support as long as this red number does not close under 80, I think it's the Russell. Close under the 80, then I think price in the 18-day average can make the run. So this is the one I'm looking for the most support out of. In the VIX, you're oversold, not trending. You have a pattern of a higher high and a lower low. I will not be surprised if you hit the lower Bollinger Band, whatever that number is tomorrow, and you see put writers step into the market looking for a bounce back towards the 18-day average of closes. I don't see a trend per se in it. In the bond market, here's sideways action trying its darn best to break out of it to the downside. The trend is down. Lower highs, lower lows. The first challenge of the Bollinger Band, as I often say, that's where I'm looking for the pros to step out. I think they stepped out. You got a little bit of a bounce on Friday. Now today you're back down to the Bollinger Band. It's trying to figure out what it wants to do from here. Same in the 10-year. Trend is down. You hit the Bollinger Band. You're getting bouncing there, but certainly the bears, as I see it, in control of the market. What about overbought, oversold? A settlement with a under 30 reading to me is oversold, so I'm looking for the market to drop a bit. We then get to TLT. The trend is down. Again, lower highs is measured by the swing line, and these are the peaks. Lower and low, you can see that. First support, the lower Bollinger Band. Again, an oversold market. So is this going to be one of these weeks where you make moves early and then you start evening up as a lot of traders get ready for the Christmas holiday? Don't know. I don't see a lot of fresh economic data coming out. That is something to pay attention to also. In the dollar index, I see a downtrend that is very orderly. The market hits the Bollinger Band, bounces to either side of it, and just keeps riding it. Now, is it oversold? Yes. It has not converted itself into something that's just like glue, locking in. It can get a bounce here, but at best, I'm looking for a bounce. We had a bearish crossover. This was the day it crossed over, Thursday of last week, where the 18-day average in red finally settled under the 100. And if you go back on this chart, you don't see that behind me anywhere there. That often, I wish I could use the word always, but it wouldn't be accurate, often leads to a new break low for whatever that move is. Market did that on Friday, sort of bouncing away today to the other side of the Bollinger Band. Eurocurrency. Up to the upper band, backing away from it. No surprise there. British pound. Now something different is happening. If you look, you lost the embedded reading. Now let me show what this means by embedded. Both numbers were over 80 on Friday, both over 80 Thursday, both over 80 the day before, and as that's all happening, you can see how the market's running to the upside. That's what I love about slow stochastics. They sometimes can give you an edge on momentum, and then the question is, does price follow with it? And it did very nicely, as you can see here. But now you're getting your first sign where that's being lost. If it stays lost tomorrow or early on in the evening and really falls away into the very low 70s, the odds would favor price and the 18-day average, and this number will move up, are going to try to make a run at each other. Whether they hit, I can't tell you, but the odds favor that up here, pros are coming out of the market. Japanese yen, as you can see, we're just hugging this lower Bollinger Band, trying to work lower. Same thing in Bitcoin. Now, for the first time, I'm going to tell you, again, I think that the pros are coming out of shorts. You hit the lower Bollinger Band. You did it back here, bounced to the 18-day average, came down again. That does not mean the trend has to be over. This is where I think, quote unquote, smart money's taking their first shorts off. I don't know why I've got that line there, but it's my doing. In the Brent versus WTI, still over the 18-week average of closes, 498's the difference. But I will say the IEA has pretty much done a great job of calling this year as to what the differential would be. In the Brent crude, we've got a lower and low. You hit the first Bollinger Band, you're backing away from it. WTI over what? Well, I don't know. Are we embedding? Both numbers are over 80. Both were over 80 on Friday. Both were over 80 the day before. So I say this market has got an embedded reading, which means I think the pros will step in and buy these breaks until that red line closes under 80. In the gasoline, the market's got a lower low, higher high. I'm still friendly in that market. Natural gas filled the gap. Do you remember I was saying I thought this market was going to try to fill this gap that was left right through there? Market had gapped down. It took it a while, but it's done its job. And now what the market has done is it got high enough today at 235.10 to put in a pattern of higher lows, higher highs. It is negated because the bias is down since the settlements under the 18-day average of closes, but momentum is acting like it wants to correct. In plain English, there's room for this market to move higher to work off an oversold condition. You know, if you like what I say here, you're probably going to like what we also write, because our writing comes from pros with many decades of experience. We have a lot of people here with my color hair. We've been around this market a long time. It does not mean that we know what we're always talking about. I laugh about it because at best, and I went out with one of the best traders I ever knew in my life yesterday for breakfast. And I think he'd be up there with the top and all the great books and so on. And he was so right. He said, Ira, you're only as good as your last trade anyways. There's so much truth in all that. So what we do as a group is we cover in a free trial all the different major categories. We write about options, futures markets, what we see the commercials doing, where we think you're at. And it doesn't matter if you're in the financial arena, the metals arena, the energy. We're covering them in detail with graphics, charts to go behind them. If you'd like to see what our traders see and the reason that they're with us in this crazy environment, well, go to www.iraepstein.com under the word free trials. Sign up for what you'd like. We'll take care of it. You can call us, or you can click up here if you want to be taken right to that page if you're watching me on YouTube. I'm Ira Epstein. You have a good day.